Hey everyone, welcome back. If you think you have crypto figured out, you might want to get ready for a pretty big reset. We are diving into what 2026 is shaping up to be for the whole digital asset space, and the big theme here, it's a massive shift away from all the hype and all the noise we're used to. Crypto is finally growing up, and the focus is shifting to just one thing: real, tangible utility. This quote from Binance Square just nails it. For so long, crypto was all about the story, the narrative, the speculation. But as we head into 2026, that whole game is changing. The projects that are going to lead this next wave are the ones with solid fundamentals, clear use cases, and actual real-world value. It's not about just surviving the crazy market swings anymore. It's about actually deserving to be here. So, to really get a grip on where we're going in 2026, we first have to look back at the year that kind of changed everything, 2025. It was a really tough year for a lot of people, no doubt about it. But it was also this necessary wake-up call, a reckoning that really set the stage for this new era of maturity. Now check this out, because the story this chart tells is fascinating. According to Pantera's data, while Bitcoin and Ethereum took a bit of a hit, the broader altcoin market just got crushed, down a whopping 60%. This wasn't just another dip. No, this was a huge consolidation. Money just poured out of those speculative, story-driven projects and flowed toward the assets with real infrastructure and, a clearer reason to exist. So the big takeaway here isn't failure, it's filtration. It was like a massive spring cleaning for the whole market. That brutal bear market for altcoins basically washed away all the projects that were just built on hype and shaky foundations. And as painful as that was, it was so important because it cleared the way for the really solid projects to finally get the spotlight and the capital they deserve. So with all that noise cleared out, who steps into the vacuum? The institutions. The first huge trend that's defining 2026 is just how fast institutional and corporate adoption is happening. And we're not just talking about them dipping a toe in the water anymore. Oh no. This is about them going vertical, integrating digital assets right into the core of how they operate. And if you want proof, just look at this number. This shows you the conviction of the so-called smart money. While everyone else was panicking, Silicon Valley Bank reports that VCs poured nearly $8 billion into U.S. crypto companies in 2025. That's a 44% jump from the year before. They weren't buying the hype, they were funding the builders. They were investing in the long-term infrastructure. And they're not just investing, they're straight up buying. M&A activity, mergers and acquisitions, went through the roof, hitting an all-time high. You can see the strategy here, right? Why try to build every single piece from scratch when you can just buy the companies you need to create a complete end-to-end financial platform? They're consolidating to offer the whole shebang, from trading and custody to payments. And this is what that deep integration actually looks like in the real world. We're way past just talking about companies holding Bitcoin on their balance sheets. Though, over 172 public companies now do that. We're seeing huge banks like US Bank offering custody, others getting ready to accept crypto as collateral for loans, and major corporations using stablecoins to settle business-to-business payments in seconds. This is crypto becoming the actual plumbing of the financial system. Okay, so this huge institutional push leads us right into our second major theme. It's not just about buying and selling digital coins anymore. It's about using the underlying blockchain technology to completely revolutionize traditional finance by bringing real-world assets on-chain. Okay, so you're probably hearing this term RWA everywhere. What does it actually mean? Well, real-world asset tokenization is actually pretty simple. It's just the process of creating a digital token on a blockchain that represents ownership of something tangible in the real world. Like a piece of art, a corporate bond, or even a US Treasury bill. And this is why it's such a game changer. I mean, look at the difference. Traditional assets, they're often illiquid, slow, expensive to trade, and hard for the average person to access. But when you tokenize them, you suddenly unlock 24/7 global markets. You can sell off tiny fractions so anyone can invest. And you can settle trades almost instantly using smart contracts. It's a massive upgrade. And hey, this isn't some pie-in-the-sky theory for the future. I mean, look at this. According to Disruption Banking, the Avalanche network alone already has more than $1.3 billion worth of real-world assets tokenized and running on its platform. This is a multi-billion-dollar market, and it's growing like crazy right now. And we're seeing the biggest names in the world jumping in. BlackRock, the largest asset manager on the planet, has a $500 million tokenized fund. Franklin Templeton is running money market funds on-chain. And it's not just traditional finance getting a facelift. Crypto-native RWA apps, like the prediction market Polymarket, have absolutely exploded, reaching a reported valuation of $8 billion. Okay, so you've got all this institutional money, all these real-world assets pouring onto the blockchain, but all of that needs to run on something, right? For this new financial system to actually work at a global scale, the engine underneath it all has to be unbelievably robust, secure, and efficient. Which brings us to the really critical question. Is the technology, is the infrastructure actually ready for prime time? So let's take a look at the upgrades happening at the very core of the system. Well, the good news is we're not starting from scratch. The foundation is already massive. As this data from Coinlaa shows, DeFi protocols like Lido, Aave, and Uniswap, these are already billion-dollar platforms. They're basically the bedrock for this new economy. They're the banks, the exchanges, and the lending desks of this on-chain world. And this metaphor from the MXC blog, it's just the perfect way to think about what's happening next. For years, the big focus was on scaling, on building bigger highways around the city. But now, with upgrades like Ethereum's Glamsterdam, the focus is shifting inward. It's about making the core system itself more efficient, more fair, more stable. It's about fixing the traffic lights inside the city. So what does that actually mean for you? Well, Glamsterdam basically tackles this in 3 key ways. First, it makes the whole process of creating blocks more fair and resistant to censorship. Second, it makes your transactions go through faster and more predictably. And third, it overhauls the gas fee system. You can think of that as the transaction fee, to make the costs way more stable and rational. For users, for traders, it all just means a more professional and reliable network. All right, and for our final major theme, we've got to talk about the powerful collision of 2 absolute giants, artificial intelligence and crypto. When these 2 technologies come together, they don't just add to each other, they actually unlock entirely new kinds of economies. And again, if you want to know how serious this is, just follow the money. This stat from SVB is absolutely staggering. For every single venture dollar that was invested into crypto companies in 2025, a full 40 cents of it went to a company that was also building AI products. That is a massive flashing signal from investors who are betting big on this convergence. And it makes sense because the relationship here is so symbiotic. AI needs crypto to create things like autonomous agents that can actually own and trade assets by themselves. At the same time, AI desperately needs the decentralized physical infrastructure, or DePIN, that crypto networks can provide. Think of it as a global shared supercomputer. And maybe the most important piece? Blockchain helps solve AI's biggest Achilles heel, trust. It gives us a way to verify content and fight back against things like deepfakes. So let's bring it all home. When you look at the arrival of institutional capital, the tokenization of pretty much everything, and this incredible convergence with AI, it all points to a single really powerful conclusion about where crypto is headed in 2026. So what's the bottom line? The crypto landscape is changing, and it's changing for good. We are watching it move away from an industry that was driven by fragile speculation and pure hype, and into a brand new era that's going to be defined by real-world utility. Crypto is finally graduating from being just a volatile asset to trade to becoming essential and visible financial infrastructure. And that leaves us with one final kind of provocative thought. As the very rails of the global financial system are being rebuilt piece by piece on-chain, it's really worth asking, will the next financial revolution be televised or will it be tokenized? Thanks for tuning in.